Hello, fellow classmates of financial accounting at Cuesta College. I come to you from Pacific Grove, California, as I attend school at CSU Monterey Bay and take this online course at Cuesta. I find it interesting that at Cuesta College, I'm taking a couple online courses right now to pursue business. I'm actually a psychology major right now at CSU Monterey Bay and just jumped into business because I thought it'd be great to double major in. So I'm fairly brand new at this stuff. So if you guys have any critique on this presentation or anything, just shoot me an email or anything. This would be great. So I'm Brandon, and here we go. Here are some quick facts from the reading that Sylvega signed us, and I thought they were actually very interesting. I have 3 facts coming up, and then I'm going to go over accrual basis accounting versus cash basis accounting. Okay, so here we go. So here are some facts. By the time we are seniors in college, 56% of us will carry 4 or more credit cards with an average balance of $2,864. In 2005, adults with a bachelor's degree earned on average $54,689. Wow. So we expect over 100 grand so we could start paying off our college debt, and yeah, we get $54,000. So shoot for the stars, and let's see where that takes us. The number of 18 to 24-year-olds declaring bankruptcy has increased 96% in the last 10 years. This is the most astonishing stat to me. And lastly, people in the 18 to 24-year-old range spend nearly 30% of their monthly income just on debt repayment. Also very cool. Yeah, not so cool, but very cool. Right. Accounting methods. So, accrual-based accounting. This method measures performance of a company by recognizing economic events regardless of when cash transactions are made. Accrual-based accounting allows the current cash in and outflows to be combined with future in and outflows to give a more accurate picture of a company's success. And then we have cash-based accounting, which is a little bit more inaccurate, used for smaller businesses. The GAAP requires accrual-based accounting for big businesses, so it's a very reliable method. Cash-based accounting recognizes revenues and expenses at the time of the actual transaction and cash being paid out. So when money is given, boom, cash-based accounting, you can look very good on cash-based accounting, but accrual in the long run is a very, very reliable method. So cash-based accounting is less accurate due to accrual because of predicting accrual has in its method. Accrual method, it predicts in the long run the trends that you're going to have as a business. Okay. So benefits of accrual-based accounting. It projects how much money will be coming in and immediate reflection to what the company can expect in the future on their financials. Analysts can look at the trends undergone by the business and keep things up to date. It's a very accurate method, allows business to more steadily record their incomes and debts through this method of accounting. Yeah, so basically what I just said, boom, there we go. And benefits of cash-based. It's very simple. So you're a brand new business, you want to get into your financials, make sure it's all correct. This method is perfectly okay. You're a small business, you want to get going. Cash-based is for you. So it meets financial needs of a small business and gets the job done quick and easy. It's a single entry system and accurately shows cash flow and is easy to understand for business owners. And here we go to the cons of both of these methods. Accrual-based accounting, it's a very complex method and may be difficult to manage. I could argue that because big business owners should be able to manage their financials at this point. Accuracy is very important, and many business owners have been looked at poorly because this is not used accurately oftentimes. And deception of financial statements. I mean, it's not used accurately oftentimes because of the deceptions of business owners, big business owners. So, I mean, it all depends on the company itself and their ethics. So, let's go to drawbacks of cash-based accounting. So these have a couple more drawbacks, I think, for cash-based accounting. If a company has a large amount of invoices paid one month but doesn't make a lot of sales, cash-based accounting can make businesses look bad. An accurate picture of the company and what they have gone through from month to month. So if a company is taking in, let's say, someone paid them $200, but the product wasn't delivered, they get that $200, but they didn't make that sale because the product isn't in. They look good for that month, but month to month, they're not going to look good. So in the long run, accrual-based accounting is the better method. And in reality, cash-based can make things more inaccurate and harder to deal with in the long run. Just what I said. So accrual versus cash-based method. GAAP requires the accrual basis method, and a cash-based method can make financial statements seem very misleading as it counts funds when they are received and not incurred. Incurred is key for this. Lastly, modified cash basis, basically a combination of the both. Revenue and expenses, expense recognition as cash is received and dispersed, with the exception of large outflows and assets. Mostly all large companies use the accrual method. In conclusion, um, like I said, it's the better method, I believe. It is more accurate. And if you want to become a big business, be a successful business, you have to understand how to do your financials correctly, and this method is the best way to do so. And that's all I have today. Once again, I am Brandon, and I'm really happy to be in this class with you guys at Cuesta College, and I hope you guys experience a great time there at Cuesta. It was definitely a long journey for me there, and yeah, a great area. So keep shooting for the stars, and I hope to see you guys soon. Goodbye and good night.